But the question they can ask in different ways. Why any message or LC that has been received via SWIFT, it becomes a operative instrument? Or another question, why a message received through SWIFT is reliable? Another question they can put it, why a LC message received or an LC received or a payment message received, anything financial message received via SWIFT is authenticated. Like that, they can put the questions in any type. The answer is the because one-to-one arrangement already will be established. That is known as BKE, bilateral key exchange. That name is gone. The new name is RMA, relationship management application. Only two banks, one bank in America or one bank in India, they establish exchange RMA. Then only we will be able to send the message across. No other bank will have got access to that course. That is why this is self-authenticated. This is reconciliation easy, error-free, and the very name implies SWIFT means very fast also. Actually, the acronym is excellent. Society for Worldwide Interbank Financial Telecommunication. That also concept with the SWIFT, easy transmission, electronic transmission, error-free transmission. So the possible question they can ask is this, that RMA they can ask. That is why this is a reliable instrument. That is why this is a self-authenticated. You need not. Or this is an operative credit. This is a documentary credits are operative instrument. And just like you are all IFSC code, you are all familiar. So I am not explaining. 11-digit unique code. So SBIN is State Bank of India, IN is India country, BB is branch and branch code, and BB 398 mean automatically it will come to that is the 200 main branch of State Bank of India. So this is the uniqueness, just like our IFSC is easy. So this is benefit is objective. They can ask fast, error-free, self-authenticated, globally accepted.
Excuse me, sir.
Yes.
Sir, please explain the self-authenticated message.
Self-authenticated means already it is authenticated because of you have exchanged, just like the check signal system. Two banks have exchanged this RMA. So only the message that is originated from here will directly go to that receiver only. No interlineation. Nobody will be able to access that. So that is why it is authenticated. It is confirmed. You can operate on it. You get a message via SWIFT to pay you. Suppose you are working in a bank, you are getting a message via SWIFT to give me a credit of $1 million. You need not bother because it's an authenticated message, genuine message, reliable message. You can immediately give a credit. Suppose you are getting some other message other than this, what means you have to confirm. There could be fraud. Only after getting the confirmation, you will be passing on. So that is the benefit of SWIFT message. Hope you have understood.
Next yes, sir. Thank you.
Next is these are all 4 small words. I am not explaining. Examination point of view, the question will be, what is the gross settlement system basis in US called? It is similar to our RTGS. You know what is RTGS? Answer is Fed wire. So what is a US based settlement system which works on net settlement basis? For the question, answer is CHIPS, Clearinghouse Interbank Payment System. Then similar, what is in a net basis system in British? Answer is CHAPS. Same RTGS, similar to our RTGS or gross settlement system in European countries is known as targets. So just to learn, this name is very important. You equate this with either gross or net. That is the point that makes the difference. Never by heart anything, very simple. Because more simpler way you are understanding, never study, understand that. The old concept is studying. You need not study anything. What is this? Anybody, what is your name? Did you study that? You are not studying that. Just familiarize, that is enough. Because by showing your inquisitiveness, familiarize the subject. That is more than studying the subject. Because studying, when the word study comes, or a complementary thing is the stress or the strain will automatically come. So you need not familiarize. You are a banker. Whatever that you are studying is for helping your knowledge related to a sick. If you are studying, suppose you are studying something about a medical thing, that I can say it is studying. You are studying something. Okay, so that knowledge will be additional value for you. But anything connected with banking, it is not studying. You are familiar. You have to know that. So it will give value. It will give it. The knowledge will make your work, whatever that you are doing, rejoicing. That will make you happy. Like that, you should the approach should be as simple as possible. That casual thing will definitely enrich you, especially at the time of examinations. Okay, RTGS and that NEFT, you know very well. These both two are working based on which act? PSS, Payment and Settlement System Act. The question they can ask is only two questions. RTGS is that is amount 2 lakhs. Now it is so simple that everybody know. Definitely they will not ask. They can only go for the pool account is maintained with the Bank of India, whereas the pool account here is maintained by Apna banks. Okay, then. And another question is the PSS Act. I told you, know, Payment and Settlement Systems Act. That is that also you should remember. Then this NRI, this you can forget about this slide. Only that there are two definitions for NRI. One is Income Tax Act. That is explaining with respect to the period of stay. Earlier it was 180, now it is 240. We do not require that. It is only from the tax angle. It is only to impress upon that there are two separate definitions. But we are bothered only by our Bible is only FEMA. Our Bible or Quran or Gita is FEMA. We have to get guided only by the FEMA. So NRI, what are the changes that has come only I will be explaining. NRI, earlier that was including PIA also. Now that was separated, now that is separated and PIO has been defined separately. And because this is for investment purposes, so NRI as per FEMA is only a citizen who goes abroad for employment or some other purposes. That you know that. The change that you have to notice, PIO is separated from here. Another change is earlier PIO was defined with that whoever is holding Indian passport. Now that is taken away. Now it is defined that for preceding generation, whoever is an Indian origin, naturally that suppose a person of Indian, whoever is a citizen, either his father or grandfather or father's grandfather, anybody who was an Indian origin, naturally this person also will become person of Indian origin. And most important is his spouse automatically also will become PAO. And overseas citizen of India, OCI, he has migrated from India. Now he is a citizen of a foreign country who does not have any voting right. So these are the three terminology that you should familiarize. Here PAO, the possible question they can ask is, one a resident Indian, an Indian was there. Now case study will be very large. Don't be afraid of this. You just whenever you are reading that, more the number of sentences, the matter will be very simple. Only that they are giving a large description, but your eye should be focused only on what we have to pick up. So suppose I will tell an example that will be more helpful for you, especially at this point of time. A person was in Delhi, he was staying in India, right? He now is moving to US, Canada. He is moving to Canada and he has taken permanent, he has become an immigrant in Canada and he is marrying a Canadian woman. What is the status of that Canadian? As per this never person of Indian origin, because this person has moved from India. Okay, he is an PIO, person of Indian origin. Let him be an immigrant in Canada. Still, he is a PIO. He has married a Canadian lady, and automatically the spouse also will be treated as PIO. Like that, let them that you have to only bothered only by this for preceding generation. Suppose even if this person is there, his grandfather was in India, then naturally he will become a PAO. His wife, even if she is a Negro or any lady, She will also become a PIO. So that is the only point you have to bear in mind. Case studies will be building only around that. Okay. Then NRA account, you are all familiar. You are all familiar. Only the changes is that now the joint account ship is permitted. Now the joint account ship is permitted along within resident India. That is an NRI. He is in overseas. His status is non-resident. He can have a joint account with a resident Indian. Only the class is farmer or survivor. This is literally helping only for legal, that in case of death settlement and other thing only, it will be helpful. All other practical purposes, power of attorney holder is what. He should give a power of attorney to a resident person, only then he can operate. He cannot open or close or transfer money donation like that. That is the only prohibition. All other normal transaction, he will be power of attorney holder, can do. He cannot send money to any other person. He cannot send gift or donation, or he cannot any other thing he cannot do. But suppose the account holder, I have given a power of attorney to A. I have gone to US. I can ask A to send money to me. He can send to me, but not to any other person. So these are the POA, and this is benefits. It is exempted from all taxes. As I know that NRA accounts are repatriable anytime. The period is 1 to 10 years. Then this is what they can put. Change of status on return. This they can ask as a case study. As a case study. This also, so many build-up will be there. Don't get afraid or get distracted by the build-up in so many words and other things. Look at it will be more explaining, it is much simpler will it be. That is what I have seen from the students' interaction. Change of, suppose a person is returning back to India. He chose to remain in India. When his status will change. Earlier it was 6 months, now it is not there. The moment he comes, the status will change. So we have to get a letter in writing. His status will become resident Indian. When he becomes resident Indian, Reserve Bank of India rule says all his existing account which were running as non-resident will be turned to resident. So accordingly, his NRO account become ordinary SB, NRESB will become ordinary SB, NREFD will become ordinary FD, except only one exception, FCNR. FCNR is the only account that is permitted to continue for the remaining period. Remaining period. All other account, it will be immediately changed. That you might, that only will be the question they ask. And as I told you, immediately get a letter in writing, immediately the status will change. These are the possible questions they can ask. NRI account, this I here also that that I told you that for FRS, all joint account along with a resident Indian, but class that joint account facility will be under FRS facility. Here the change or that important thing that you have to bear in mind is up to 1 million US dollar per financial year, he can repatriate the money subject to payment of taxes. Suppose your client is coming in, want to transfer money in euro. How will you do? It is goes without saying all the eligibilities are mentioned only in US dollars. If it is any other permitted convertible currencies equivalent of $1 million. If it is euro, whatever is equivalent money in euro equivalent to 1 million USD, you take that euro. Or JPN, Hong Kong dollar, Singapore dollar, whatever it is, euro, pound sterling. Pound sterling should be the first currency we have to, that's a royal currency. We have to tell first. Dollar, pound currency, euro, dollar, like that only we have to go. So 1 million, any currency permitted equivalent to 1 million US dollar. So that is a subject to payment of taxes. How will you ensure he has paid a tax or not? We cannot go back in search of these things. We will request for a chartered accountant certificate. Now, the other question they can ask is, what is the status of foreign students studying in India? They can open NRO account. And foreign, suppose a foreigner is just like walk into your branch. He is showing the credentials. Can you open an account? Answer is we can open NRO account for 6 months. If it is beyond 6 months, we have to seek the Reserve Bank of India approval. Approval from RBI is required. Suppose another question they can ask. Hey, one Mr. Is a Charlie Frankton. Mr. Charlie Frankton is approaching your bank. He is saying he has been appointed in the US Consulate Delhi for a period of 5 years. What is the account that will be opened? You will be open
Normal
for
account.
normal. You will be opening for Charlie normal account. So these are the types of questions they can ask in this exam. And the status of a student studying abroad is NRI. RBI has given that because normally they will be studying more than a period of 6 months. So that is their status. In respect of ACNR, mostly there also same FRS facility is there. And this is most important thing is it is the only account where on return, suppose that status changes, we can allow the account to be completed for the remaining period. That's important. And another thing is that earlier the interest was LIBOR to LIBOR. Now it is not linked to LIBOR. Our FCNR are given by our FIB. Tomorrow that treasury I will explain. It is not LIBOR. Now it is separately given by the our FEDI will give a separate rate. Actually, that is given by the FinTech Benchmark India Limited. It is a joint venture of Indian Banks Association, FEDI and FIMDA. Now they will be giving the rate for the FCNR transaction because LIBOR now it is obsolete. It is not there. Okay. Then SNRR is a non-resident. For any person who is coming to India for any business purpose, they can open a rupee account. It is exclusively for the business operation while they are in India. Normally, the period is 7 years. Why we stay? This is only, of course, a current account only, non-interest bearing, and we have to ensure that all the transactions are genuine and it is business based. Because this account should not be misutilized because whatever is the balance in that account after that period, it can be repatriated. Because of that facility, we are compelled to ensure that the business operations are whatever amount routed through that account are genuinely trade based. So that is a repercussion. And another change that has come is in this account, suppose a person is availing ECB, that is external commercial borrowings, it can be availed both in rupee and foreign currency. If it is availed in rupee, that amount can be credited in this account. So that is the change that has come. So in that such a case, that account need not be closed within 7 years. That can continue. These are only theoretical things. That possibility only that repatriation is the most important. And that is why we have to ensure that the business operation in the account are only genuinely trade based. So that is, and of course these are all taxable. All are taxable. Then facilities to NRI. This also much questions will not be asked on this. So most important is this one. They can ask. They are asking. He cannot give a loan or they cannot make investments in partnership or proprietary concern. These are the important. Any agricultural and plantation or real estate or chit fund based business, they cannot invest. We cannot give loan. We cannot do anything on this because this is escalation and so many other things will come. These are all prohibited item. So prohibited item, we should be very careful. And also sale proceeds of immovable properties restricted to not more than 2 properties. I will explain. Suppose an NRI person has constructed 4 houses in India. 4 houses. Now he want to take back this amount back to US. At a point of time, the proceeds of 2 houses can alone be taken back. All other things subject to that 1 million. Now, subsequent year, he will be able to take. But these are all not that important. Facility to NRI, this is very important. No loan should be given for agricultural plantation, just like I told you. The proceeds of loan cannot be repatriated abroad. Loan it can be credited only to NRO account only. We will be crediting. That we know. Housing loan is permitted. Loan should be secured by EM. That all you know. This is very important. Loan against a fixed deposit, there is no limit. Whatever is 90% eligibility means, whatever be the amount, 90% we can give. Absolutely, there is no restriction. Then next is risk in foreign exchange. Everybody know what is already the risk module is over, so you will be very well versed with the risk. So comparing that topics and the depth in which that you have studied risk module, the whatever that risk in forex is very minimal, because already you would have found a place in that too. But we are only giving importance to those areas with respect to foreign exchange, risk in respect to foreign exchange. That only we are seeing. And what is the nature of unplanned and all, the theory. I'm not going into that. We will be that forward contract option swaps and all. We have got a derivatives in detail tomorrow. That in that we will discuss the possible questions on it. Coming to the derivatives, the risk. There are various types of risk are there. Now we are one is exchange risk, exchange risk. What is the exchange risk? Can anybody, just one or two persons unmute and tell me?
Conversion of a foreign currency to home
Currency?
currency.
What I am asking,
Currency.
but this is not the after the risk manage module class. This should not be the way you
Gap
answer. Huh?
Gap risk.
No, I am asking. I am
Fluctuation.
specifically asking what is an exchange risk?
Market risk.
Exchange rate
Exchange
fluctuation.
risk.
Fluctuations in exchange rates.
Exchange rate.
Okay, right. Okay. I have fluctuation in exchange risk. So this is the answer I expect from you. Now you can unmute, but I will say that the answer is totally wrong. That is why I told you, because I tell you, you are all studying, but you are all studying, completing only 95%. You are not completing 100%. To highlight that only, I intentionally asked you not to find fault with you, because this is a point, at least now we have to correct ourselves. After the risk management class, that is why I told you, this should not be the way that you answer. You should be more specific. Now you are all generalized way of answering. This is not IABF answering. It should not be generalized. It should be specific. I will tell the extant case what has happened now. I was asking you the question, what is an exchange risk? What is an exchange risk? Somebody was telling different name, okay, right, other things. But here, what is an exchange risk? The only one answer that I can pick up from you was fluctuation in exchange rate. That is the only answer I can take. But here, fluctuation I cannot take, because suppose you have got some $1,000 with you. Today it is 83. Tomorrow it is 84. Exchange rate fluctuations has happened. Today you will get 83,000.
Adverse movement.
That, as long
Adverse
as you are adverse, whenever, that is why specifically after the class, you will, because already in the risk management you have, because anything other side, downside only we are bothered, because that will, why a bank is bothered about risk management. Why the bank is bothered only about the downside potential? Can anybody answer? If I am setting question, I will be only generalized question I will ask. Why the bank is, why you are not bothered about that other side? Why the bank is in risk management, we speak only about the negative side, downside. Why the bank is
Other side is a positive
High
side.
leverage, sir. High leverage transaction.
Loss
Ah.
will be there.
Other side profits.
Very good. Only one answer. You be specific, because we are bothered about the downside potential, because it will affect your profitability. Profit will be affected. We have opened the banks. We are functioning not for charity, for profit. That is why we are concerned about the risk. If you say it is a fluctuation, it can be other way around, 50-50 chance. An adverse exchange rate will affect you. Affect you in what way? In your profitability. It will create loss or reduction of profit. Both are concerning. That is why in risk management, a person not using adverse, totally irrelevant. Because we are bothered about risk management purely because it affects what happened if it comes, to what extent I will be affected. We are bothered about that. That is why we are learning all these things. Tomorrow, if suppose the profit, instead that 5 crores profit, you have made only a 4 crores profit, heaven will not fall. But suppose you can only withstand a loss of 1 crore, but the loss will, suppose the loss has mounted to 2 crores, you will be extinct. You will not be in the business. You will be wiped off. Financially, you will be clean. That is why we are bothered about risk management. And the risk management, what are the different types in way we will be negatively be affected, financially affected. That is why we are depending on that. We have set parameters. We can adopt frame board policies so that we can work within the well-defined, pre-planned and calculated network. So that is very, very important. Settlement. So just to make you impress upon that, you make you understand. That's why I asked this. So exchange is unfavorable. Settlement is in case I do not pay, you also do not make the payment. Settlement risk will lead to liquidity risk, because I got money to pay something. So I have entered a deal with you. You pay to me. You settle on the due date. This money I am not going to take myself. This I have to settle to another bank. Chain deals will be done. So it will lead to one risk, will lead to one risk, will lead to another. We cannot offer in risk management all. We cannot define a risk will not affect only one thing. It will have got multiple effects will be there. Repercussions will be there. Country risk can cover. Why involved by country risk is exposures now. China standoff has come. So the immediately tell country risk is there. In difference in country risk is settlement risk is. Here, since settlement is the party has not paid. Party has not paid. In country risk and sovereign risk, the party is willing to pay. The party has enough money to pay, but it for reasons beyond his control, because of the governmental embargo or restrictions. Because of that, the party is not able to make the payment. So that is the difference. Even if all are risk, there is a the character difference in the nature of the risk. Ultimately, everything will boil down to loss. That another thing is there, but the mitigation will be slightly different. So that is why. So that is the interest rate risk also naturally, because one risk will lead to another. I will tell an example so it will be very clear for you. Somebody has opened a fixed deposit for a period of 3 years. He comes, that is a liability for the bank. He comes to the bank for premature closure. Okay, no problem. First number one is, first risk is, what is the first risk? Can you tell me? One person has put an FD for 3 years. We have placed
Embedded option.
that is what is the first risk? That is why I ask you.
Liquidity.
No, gap risk. My God, yeah, you have studied risk management. I will explain. Study correctly. First, a person has put 3 crores deposit. That is a liability. You have created a matching asset for 3 years to make the gap risk 0. Obligation to receive 3 years. Obligation to pay after 3 years. Gap risk is 0. Now the person is coming to you for premature closure. Obligation to pay immediate. Obligation to receive from the asset is after 3 years. So that is a gap risk. That is why I told you all our risks are correct, but most pertinent answer should be taken, because they will be giving whatever that you have told is correct. And unfortunately, all the options will be on this only. You have to select the most pertinent. You look at that angle, immediately is coming. So obligation to pay is immediate, but obligation to receive after 3 years, that's a gap risk. There's a gap. So well, immediately you have to raise the funds. You don't have the cash. Liquidity risk. You have got asset is there. Asset is different from liquidity. You have got an asset which will turn as liquidity only after 3 years. But here the liquidity is to make the payment immediately. So the gap risk has now introduced you to liquidity risk. Liquidity risk, you have to raise money from the market. Naturally, it will lead to big liquidity risk, and interest rate risk are what is both sides of the same coin. One goes without the other. So these are a liquidity will go to interest rate risk. All these risks put together is known as embedded option risk. Embedded option risk. So that is how we have to study. Examination also, read the question, you know all the answers. Now that more and more you study, you will know more answers. That's only the problem. And the effort you should take not for finding the actual answer, correlating what will be the most pertinent answer. So that is the thing. Because you see the confusion always. Suppose you have got a habit of eating a sweet after the lunch. Suppose in the house you have got only one sweet is there. After the lunch you will take the toffee, eat only one sweet is available. Suppose you have got algebra of choice, so many things are there. Laddu is there, halwa is there, so many sweets are there. Then the confusion will come. Just like that, all the answers are sweet answers will be. You have to go for the most pertinent answer. Read the question, read the question. There lies the clue. You are confused, never, always. You have got sufficient time to read the question twice. Even if never jump to conclusion, never jump to conclusions. And after finishing, you will have sufficient time. Before submission, already Valita would have told, patiently look through that, ensure everything is correct. Then submit it. Okay. I'm not going to that modalities, but I got an intention, sincere wish that all of you have taken much interest, pain, everything for it, compromises. So my humble, sincere wish is that all of you should pass this examination with good marks. Out of that intention only, I am 10. Okay, coming that operationals, your operationals also is very, very important. In the Basil and all, you would have studied Basil because the two accord two came purely because of the inclusion of operations. Because in the accord one Basil, it was not there, only market and credit was there. Then they thought the operation risk that happens because of the human error, human failure, machine failure, so many system failure, frauds, everything that contribute a lot to the loss. So that is accordingly the accord 2 has come. The operation risk, legality. So these are all the common, but most common risk that affect that forex is, that is what we are bothered about. These are the exchange, these are exchange risk. Adverse moment, already we have discussed. We have got three terminologies you should be familiarized of. Three terminologies. One is transaction. What is normally you will be holding some position, long or short. It is practically not possible. Theoretically, we have studied square and all. That is only for theoretical purpose. Practical purpose, we will not be able to square it immediately because we will not know that some other need will be there. We are not aware of the market. We should have a market lot to say. Suppose I got only $5,000, I cannot sell it in the market. I got a market lot, minimum amount that can be sold. So I achieved that. So many things are there. So certain up to a permitted limit, you will be holding that. That limit, there could be fluctuation in that. But that loss, whatever it is, we will be able to withstand. That already is permitted by the bank. So that normal day movement will be there. That is known as transaction. And translation is because of the valuation. Today you are holding some assets. Today you are holding at 83. And next month you are holding the same assets. FEDI is giving a value instead of 83, 82. Your value has decreased. So this is a revaluation. This has happened. This is a translation exposure. And operating the economic exposure is because of the government policy. Government policy, because of the change, losses can happen. And these are all exchange rate fluctuations. This has happened because of the exchange rate fluctuation. Very, very important is these two. What is pre-settlement and settlement? And the pre-settlement is we have gone for finalizing a deal next month forward. Suppose one bank's correspondent bank fails, that bank goes bankrupt. This deal will not happen. They will not be able to settle. Accordingly, though this deal should happen only next month end, that's a forward date. It will not happen because the bank which was supposed to settle on behalf of you, that has failed. So that's what there is no loss because I have not paid the fund. You have also not parted with the fund. The amount would have been exchanged only on the spot day. before the value date. It is only falling next month. But unfortunately, this transaction will not happen because the bank has failed. So I have to go for substitution of a deal. Another deal I have to find out that the rate may vary. If the rate is favorable, no question. Risk management, we speak about only downside. So if the rate is unfavorable, then I stand to lose. That is known as pre-settlement risk. That is why we call it the pre-settlement risk as a price risk. Price risk. Whereas in the settlement risk, that happens because of the time zone differences. You take the example of a working day, Monday. In a Monday, what will happen? Oh, today is a working day. Okay, today is a working day. Today is a working day. This time, you know what will happen? Time is after 12 o'clock, that euro market will be opening, Frankfurt market will be opening. Suppose we have got a deal euro versus dollar cross currency transaction. So after 12 o'clock, our correspondent bank will be paying euro. So already we are out of euro. We have to corresponding dollar. We have to receive in America only after 7 o'clock, 7 p.m. So in between the time something happens to that dollar, our New York bank, we are lost. That is a risk settlement risk. Because already I have, that is a credit risk. Because what is a credit risk? Whenever I have made the payment, they have got an obligation to pay, and the failure in the obligation will result in credit risk. So here what has happened is, so I have already one leg of the transaction, I have paid euro because of the time zone. 12 o'clock, my time has opened, I have to settle. So I have made the settlement. And the second leg of the transaction, which is to be settled in dollar, that will not happen. That is supposed to happen only 7 o'clock. In between that a bank fails or something happens, I will not get that money. That is known as settlement risk. That is known as settlement risk.
Excuse me, sir. Sir, can you repeat pre-settlement risk only, sir?
Pre-settlement is, suppose we have done a forward deal for 31st December. 31st December. That is a value date. That is a date of transaction. Your bank has to give me euro. I have to give you dollar. Okay. In between, what happens is your euro correspondent bank fails. So naturally, this transaction will not happen. You will not be able to make the payment through that bank. So the deal is cancelled. But we have not suffered any losses because only next month then I will pay the money. Next month end only you will pay the money. Next month I will pay dollar only next month. But this, because the bank has failed, this particular transaction will not happen. So I have to go for another deal. That is known as, if the price varies, that is known as pre-settlement risk. Okay, you got it?
Okay, sir.
Right.
Thank you, sir. Got it.
That is. Then these are all the various types of country risk because of the exposure due to reasons, government restrictions, sovereign risk, agency of the government itself. Government itself is at a risk. Then what about their naturally sovereign? They also will not. Government agencies also will not give. Liquidity risk, mismatch. Interest rate risk, I told you. Operational risk, system, human error, then ignorance, fraud. Because ignorance means you commit something mistake knowingly or unknowingly. Knowingly doing some mistake is known as fraud. We cannot take umbrage on that it's ignorance because it will put losses. So these are all operational risk, system failure, everything. Communication system failure. Then external events also, tsunami, terrorism, earthquake, now that also being included under operations. Legal risk is non-enforceability because the rules will be different from country to country, place to place. We will not be able to, we cannot sue based on Indian penal code in a country, in another country. There the rules are different because even the country will permit you to sue, that itself is another thing. And the benefits of risk management also you would have studied in that. Okay. Now we are bothered about only this, very good, because whenever we say risk, there is no, it is incomplete without adopting policies or framing policies to mitigate the risk. Because there is no point in saying the risk is there. Do not go that way. Risk is there. I should give you a solution. You should not go through that way because the risk is there. Go this way. Like that, I have to give a solution to you. What is that policies? What are the policies we have framed to mitigate the risk? That is very important. First question they can ask is mitigation of risk. The policies are framed by the board of directors of the bank. That is anything connected with risk management, bank's board of directors are responsible. Then overnight limit. This is for overnight limit is set for what purpose? Maximum that can be kept in open position during closure hours. Friday evening, Saturday and Sunday, whatever the limit is said, that is known as overnight limit. It should be so whatever open position in each currency a bank is holding, it should be well within the overnight limit fixed by the bank's board of directors. It is for mitigating exchange risk. Daylight limit, maximum limit that a bank can hold during working hours. It is for mitigating exchange risk. Gap limit, individual gap limit is there and aggregate gap limit is there. Any currencies, each currency will have its own gap limits. It should be also within the prescribed limit fixed by the bank's board of directors. It is the gap limits are fixed to counter mitigate gap risk. Counterparty limit, maximum exposure you can take with concern each party. This is for mitigating. Can anybody tell? Question will be asked in the examination like this only. Counterparty limits are fixed for mitigating dash risk.
Concentration risk.
Country risk.
Counterparty risk.
Country risk.
Wrong.
Concentration risk.
No.
Credit risk.
Credit risk.
Sovereign risk.
You are telling all the thing other than the answer.
Settlement
But
risk.
No. Counterparty. You see, credit risk. What is a counterparty? Maximum how much I can give it to you depends upon whether if you are not giving back, it will be credit risk. So counterparty limit is fixed because that is to mitigate the credit risk. Risk management portion is there already completed, and the ensuing exam within few hours you will be writing examination. The preparation level is not up to the mark. Please step up the preparation. That it should be point based. Counterparty limit is fixed to mitigate or hedge credit risk. Country limit, that's also credit risk. Maximum exposure I can take with Pakistan. What will happen if I do not get the money? I will lose the money. Credit risk. My credit will be totally gone. Credit risk. Dealer limit. Everything is risk only. But when you are analyzing, we have to go for the most pertinent. Dealer limit. Maximum you can allow a dealer to limit. Can you tell me example? Dealer limit is to mitigate which risk?
Operation.
Very good. Operation risk. Because you see, whenever we are studying, we have studied in a system, you will find human error, ignorance, system, procedure, everything we are learning definition. Go by the definition, we can easily correlate. Okay. And stop loss limit, cut loss limit, what is it? They can ask what is a stop loss limit. Stop loss limit is what is in the rate the route is unfavorably moving, you cannot indefinitely wait. Already the bank has fixed a limit stop loss depending upon the risk appetite of the bank. Risk appetite means, I will explain, the ability to absorb the losses based on the financial position. Example, State Bank of India, South Indian Bank. Bigger bank is State Bank of India. Naturally, they will be able to absorb more losses than South Indian Bank, being a larger bank, because their financial position is more safe. So risk appetite will be more. They can take more risk, State Bank of India. So that is what risk appetite, ability to absorb losses based on the financial. Based on the risk appetite, the stop loss or cut loss limit will be fixed. So we at the agree, it can be a percentage or in paisa term, depending upon the bank's policy. Suppose if the rate moves below 2 paisa or 3 paisa, we will cut the loss, stop the loss. so that we will contain the loss, minimize the loss at that level. Up to that level, I got my risk appetite will permit. I got financial muscle or ability to absorb that much of loss. Beyond that, it should not move. Then it will become error of the employee. Then it will become operational risk. Till that limit, it will be exchange risk. Till the stop loss limit, it will be exchange risk. Beyond that limit, it will become operational risk. Settlement risk also, I have do the settlement, you have not done it. That also ultimately will be a credit risk. But these are all different types of that, or that just like that only. Deal size limit. Deal size is maximum a person can do. Maximum person can. That deal size is suppose entire thing I should not do on Monday, so that everything will fall on Wednesday if it is spot. Suppose that center is holiday on Wednesday, my entire liquidity risk will come. I would not be able to settle the deals. So that is why we will be doing scattering and the deals will be done. This is a net open overnight open position limit. This is to be applied by the board. Here that point is no pill is what we call net overnight open position limit. Because at the closure of the any day, our exchange position will show different position. Long position will be, as an example, GBP and Euro in long, whereas dollar and yen are in short. You will take the total, this is 14 million, this is 9 million. Though this is a tricky name, NUPIL means net overnight. So people, we will have a tendency to net it. Actually, the position is not netting, it is the maximum of the sold position. This NUPIL is higher, whichever is higher, because what will be the effect even if a small 1 paisa moves? If 1 paisa in the rate, anything moves, will be affected to the extent of 14. Yeah, will be affected. There is that is here the change will not be there. So there is netting is of no use. That is why we go for maximum. And here the capital charge is 100% on limit or outstanding. Whatever is the limit, for that you have it has got a capital charge is there. So that is why we have to approve the board and we have to advise Reserve Bank of India about our neutral position. Neutral position. Last one is, what is the role of CCIL? CCIL is a Clearing Corporation of India, formed by Reserve Bank of India, is a settlement agency. They act as a central counterparty. Another question they can ask is, because delivery versus payment. Simultaneously, I make the payment without the CCL, because I will tell an example so that it will be very clear. Suppose I am a bank and you are a bank. We are doing a deal directly. I will give you amount, you will give a security. This is a deal. There's a delivery versus payment. I make the payment, you may deliver take care of the delivery of the security. Okay. There is a risk, settlement risk, because I make the payment, you do not deliver the security, risk. You deliver the security, I do not make the payment, risk. So to mitigate that, avoid that, it will be routed through CCIL. So the CCL, based on the principle of novation, even if I make the payment or not, they will make the payment to you. Even if you do not deliver the security or not, they will deliver the security on your behalf if you do not deliver. So because of the DVP, the question will be the mitigation of settlement risk. So the DVP, delivery versus payment, or the acting of CCL in the role of a central counterparty agency, will mitigate what risk? Will be the question. Settlement risk is mitigated, because I don't run the risk of settlement. Even if you make the payment or not, CCL will make the payment. Next question. From where the CCL get money for making the settlement? Because you have not paid, they got an STF known as Settlement Guarantee Fund. This is comprised of cash and other securities. So out of this STF, no bank will not pay because of liquidity something. Intentionally, no bank will stop, because their name in the market will be destroyed. But mistakes can happen. Because I was working myself and my data sir was working in the fund section. There can be, because we would have made a settlement in Bombay, that particular deal they would have mentioned, this deal you please settle in Chennai. By oversight, we would have missed it. By habitually everything is system driven. So as usual, we will be making the settlement in Bombay, but that request they would have specifically made in Chennai. So that is a non-payment. They will not be able to. Their funds will not be available in Chennai for that bank. So like that, the mistake will. Nobody, just like the personal dealings, direct. Nobody will not pay that intentionally. So that is a mistakes can happen in settlements. Change of sender, change of bank, anything can happen. And this is spot forwards. Okay, these are all the questions they can ask him. And
Sir, please, so 25th, sir, 25th. My previous level, sir. 24th. Yes, sir, 24th. Yes, once again explain, sir.
this is a NOPL is a net overnight position. This is because every day when the bank closes, some currencies will be in long, some currencies will be in short. For arriving at the net overnight position, though the name implies gives a what is feedback, it is net. Actually, we will not net. Actual position, NOPL position is whichever is higher. Here in this case, it is 14 million. Okay. There is a rationale. We will not go for description. For the time being, you just study whichever is maximum. If it is 15, 15, this is 20, 20. Whichever is higher, that is the position. Okay. Got it? Whichever, no, never go for netting. So that is the only point.
Sir, please.
So in this problem, we will tell oversold 14 million.
Yes, that is a
Sir,
NOPL. Correct.
We have to
Yes.
square it, no, sir.
No, no, you should not skew. That is what I explained. Because if there is a 1 rupee movement adverse on these currencies, you will be affected 14, not the net of 5. That is it. Now, you don't bother about all these things because if you go for an analysis and this time will be consumed. For this time at this point, few meters away from the examination point, examination venue, whichever is higher, study that, that is enough. Whichever is higher. It's a rationale. Rationale. Everything has got a rationale. Okay.
So please explain once again how CCIL will will make the payments.
Out of their SGF, they have got a settlement guarantee fund, which is comprising of cash and government securities. This is obtained from all the member banks. So they have got an accumulated fund. It is
Funds.
out of that accumulated fund, they will make the settlement.
Okay.
Okay.
Okay. Sir.
Next day, you have to compensate. That another thing is there. Okay.
Okay. Achha, second again, we have to compensate. We have to accumulate
Winner.
that much of amount again. Yes.
You have to compensate
Yes.
with interest. You have to compensate.
Achha, with interest, we have to compensate.
I see,
Okay.
other way. Only that your name will be protected because other bank will not suffer.
Achha.
That is,
Okay.
so
But
that
does,
is a mitigation. That is the mitigation of settlement.
but the other bank who will be receiving the payment means, does they come to know that this is being made through CCIL or something?
Yes,
or
yes,
this?
yes. But all are through CCL only. Everything is through CCL.
Okay. Okay. Okay.
And
Yes.
even if they are making the payment, CCL will make the settlement. The other bank will make the payment to CCL only. You will give to that is a settlement. That is a mitigation. Okay.
Okay. Okay.
That
Yes.
is you. There is no direct. That is a principle of novation. Because this is a quick snacks class, I am not describing what is novation.
Okay. Yes.
Don't be, okay.
Yes. Thank you, sir.
Right.
So what about novation?
Novation is that you are in contractual obligation between three parties. Because unless I say that on behalf of, if I do not pay, he will make the payment. Unless I tell specifically or documented, other person need not accept that. Okay. That is it. I'm taking the next slide. Okay. Next, we will go to the most important thing. Everything is important. It's documentary credits. The probable questions can be more from it. So in this letter of credit, the question can be, it is UCPDC, as you know that it is for formulating or increasing the global trade, facilitating more and more global trade. There should be the common party who gives guidelines. And all the banks in the whole world, globally, they are all expected to follow this UCPDC. That is why it is known as Uniform Customs and Practices for credits. The questions can be, what is the present version is 600. UCPDC 600. Earlier it was 500. It has got 13 articles, and for e-commerce and all, 12 another articles is there. And another is question is, it is formulated by ICC Paris, International Chamber of Commerce, Paris. And another thing is for the parties to, everybody know what is an LC. So regarding LC, everybody know very well, because for promoting global trade, you do not know actually who suppose we are making some exports. Export, what is an export? It is selling across. It is nothing but selling. When it's across a country, when the goods you are selling some goods which is crossing Indian borders, it goes to another country. We call it export. Then the other party, whoever is the buyer or the importer, he has to make the payment. But we do not know the creditworthiness of that party. We cannot believe, and also he cannot believe us, because he doesn't know that whether you will send the goods what he has intended. So that's a need for another bank. He goes to his bank in America. They will open a letter of credit. The letter of credit says that suppose you are sending those documents based on which he can conclude that you have exported from here that exact goods, same goods what he has intended. So already he has requested for certain particular goods. What is the proof that same goods what he has intended that is being exported from here? That documentary evidences, just like invoice, packing list, inspection certificate, a bill of lading, anything, Chamber of Commerce certificate, this will be presented. This will be documentary evidence that the goods what he has intended is shipped. How we know what he has intended? The goods we have sent is the same what he has intended, and inspection certificate is there. He will appoint an inspection agency. They will come and inspect and say that goods are in condition, same thing. Okay. So based on this document, we can easily know that, these are the goods that he has intended. Then that opening bank, that is by always the LC will be opened by a importer's bank. So that bank is obliged to make a payment provided you are giving the documents. We call it as compliance credit. If your documents are LC compliant, the opening bank is bound to make the payment under the LC, irrespective the importer has got money or not. Even if your buyer is making payment or not, we are not bothered. Once you give the documents to the opening bank, they are obliged to make the payment. But since that is why this is known as documentary credit. We are dealing in documents, not in actual goods. And the parties to that are applicant. Always the applicant of an LC will be the importer. Opening bank will be the importer's bank. Beneficiary, that is a party here, because he is the benefit, because the benefit for the person exporter will be the beneficiary in an export transaction. No, why he is a beneficiary? He need not know about the foreign bank or foreign person importer. He is only aware of his bank in India, that is advising bank. He gives the document to the advising bank. We negotiate and make the payment to him. Then thereafter we send the document and get the money reimbursed. So the beneficiary is getting everything here itself without knowing, without taking the risk of the buyer or the bank. Simply he knows only his bank, that is us. Because the exporter is our customer, we are the advising bank. He will come to us, we will negotiate and give the money to him. So that is why he is beneficiary. Advising bank is his bank. Who advise the seller means exporter's country. Confirming bank. Confirming bank, definitely one or two questions will be there. Confirmation, here additional thing you have to study. That confirmation will be added. Suppose what is the meaning of confirmation? If the bank is confirming the credit, once the exporter gives the documents confirming the credit, they will make the payment to him immediately. Thereafter, the exporter is absolved from the liabilities. That is a confirmation. Thereafter, the confirming bank, suppose sending the document to the opening bank, they find some discrepancies and they do not make a payment, the confirming bank should shoulder the entire credit risk. So the possible question they can ask the confirming bank is, what is the nature of the risk the confirming bank will shoulder on confirmation? Answer, credit risk. Because once they add the confirmation, totally the exporter is absolved from his liability. That is the thing. Negotiating bank or the nominating bank is the exporter's bank, who is authorized to make the payment on presentation of the document. Reimbursement bank. What is a reimbursement bank is, so because once we open an LC, import LC for the customer, we are the bank who have to make the payment on behalf of our importer or buyer. Suppose your customer has imported some goods worth $1 million from America for import of a machinery. On behalf of the customer, on the due date, you have to make $1 million to that foreign exporter of that bank. You have got account with your Citibank or Nostro account in correspondent bank in America. So already what you will do is, you will give an authorization to your bank in America to reimburse that exporter's bank in that country. Because we will not send TT on the due date. Suppose you are leave or something, the payment will not. So everything is STP, straight through process. So reimbursement bank arrangement is arrangement where that exporter's bank, that is importer's bank, that is we will give an authorization to reimburse to our Nostro bank. And also another message we will give to that exporter's bank to claim the reimbursement. That is known as reimbursement claim. That is a claim authorization to reimburse, and that is reimbursement claim. So on the due date, they will claim, our bank will debit our account and make the payment. This is reimbursement bank. I will explain clearly with another slide is there. So these are the four parties to that. This importer, he will open a LC with his bank. They will send the documents to the exporters. They will advise the credit to the exporter. Exporter will export, submit the documents to the exporter's bank. They will make the payment to the exporters. He is happy. They will send the documents to the Citibank, New York, opening bank. They will verify all the documents are pakka, okay. They will make the payment. They will debit his account and make the payment. But if the documents are LC compliant, even if money is here or not, they have to make the payment. And normally he will get the documents, and so this is a win-win situation for everyone. Now this is very important. These types of LC, revocable LC, that is revocable LC. Earlier, UCPTC 500, it was revocable. Without the consent of the parties, it can be revoked. Now UCPTC 600 is irrevocable. Without the consent of all the parties, you cannot change, you cannot amend. Confirmed LC, I told you, once you add the confirmation, you are liable to make the payment, irrespective the foreign party makes a payment or not. You are shouldering the credit risk. Naturally, you will get confirmation charges you will be getting, but the entire credit risk you will be shouldering. That is irrespective. Another point in confirmation they can ask in the examination is whether the LC opening bank can instruct you to add the confirmation. No, adding the confirmation is the pure discretion of the advising bank. It is, I am the advising bank, my customer is the, say, exporter. That foreign bank cannot ask me to add the confirmation. confirmation. It is my pure discretion to add the confirmation, because once I add the confirmation, I shoulder the entire risk. So I have to decide I should shoulder it or not. But only point is that opening bank is asking you to confirm the LC. You have to put it in writing. Send the message via SWIFT immediately that you are not willing to add the confirmation. So the confirmation adding is totally the prerogative, discretion of the advising bank. No bank can force a bank to add the confirmation. Transferable LC is the LC can be the beneficiary can transfer this to another person. Red clause letter of credit, often in the examination they ask. It is based on the request of the LC opening bank. The LC advising bank will give some money by way of pre-shipment finance to the exporter. In case the exporter does not make the payment, the LC opening bank should compensate the advising bank. Because in credit and all, we are only bothered. I will make the payment, but who will pay in case he doesn't make the payment? That's a clause. So here the opening bank will make the payment. What is green clause letter of credit? Here, in addition to the packing credit expenses, storage warehouse expenses also will be paid by the advising bank. Here also, in case your customer exporter does not make the payment, that opening bank will make the payment. Back-to-back LC is, suppose when you are transferring an LC, the problem is the new beneficiary will come to know the details of the LC, because he will come to know the detail of the original importer and all. So back-to-back LC is, you do not want to disclose the details of the foreign buyer to the next party. So you can open another LC. You will become the opener. The second party, he will become the beneficiary. So the benefit of back-to-back LC is two things. Number one, when you are transferring the LC to a new beneficiary, he doesn't know the details of the original importer. Number two, you can suppose in the case of sub-suppliers and all, if only you open an LC in their name, they will be able to avail the credit. If this amount is for larger amount, turning to a few lakhs or crores, unless you transfer and open an LC, they will not be able to avail credit. So the two benefits are there. Standby LC, nothing but it is a name in lieu of bank guarantee. In America and all certain countries, there is no concept of standby bank guarantee. Instead of bank guarantee, it is standby LC. This also is governed by UCPDC only. And the basic difference between an LC and standby LC is for performance. If you give me the documents, I will make the payment. But in bank guarantee or standby LC, non-performance. If he doesn't make the payment, I will make the payment. So that's a basic difference between these two. So LC is for performance. If you give me the documents as stated in the LC, you perform that. Give me the documents, I will make the payment. But here totally standby LC, totally opposite, non-performance. If he doesn't make the payment on the due date, we will make the payment. Revolving LC, because certain LC will be giving repetitive orders. One order you have supplied within a month, I would have sent the order, I would have received the payment. So the party has to go for another opening another LC. There in foreign and all, it's very costly. So revolving LC is, once the payment is received, again the original value reinstate till the expiry of the LC, so that it will avoid the problem of opening new LC. That is it. And these are all the different.
Can you repeat the difference between standby LC and bank guarantee?
Standby LC and bank guarantee are one and the same. Same only, their name is different. In India, we call it bank guarantee. In America, they call it standby LC.
So please once again explain back-to-back LC.
Back-to-back LC is, I have received an LC. I am the beneficiary. I cannot do the export. So I can transfer to another LC, another person, beneficiary. Okay. So when I transfer the LC to other person, he will come to know the details of the original importer. He will directly correspond with the person and snatch away the business from me. To avoid that, I will not disclose from where I have received the LC, who is the I am an importer or buyer. So I will open another LC based on this LC. back to back LC. On the back of this LC, I will open. So I will become the applicant. The new party will become the beneficiary. So he will not know the details of the original LC. So he will supply the goods to me. I will send these goods to the party. That is back to back LC.
Means it can this kind of transaction can take place in case of vendors or something like that.
Yes, because they're correct.
Correct, no? Okay.
Right.
Yes, sir. Thank you.
I think these are the basic articles. Very, very important. We will discuss only 1 or 2 articles. Article 14. This speaks about the 5 banking days. Earlier it was 7 working days. UCPDC 600 speaks about 5 banking days. 5 banking days following the date of presentation. So you should never have imputation of deeds. Just like the spot day, Monday, second working day following the day, Monday transaction. So here also 5 banking days following the date of presentation. So a person has given some documents on Monday. Within what time you have to negotiate? Can you tell me? Monday he has given the document for negotiation. You have to either stay yes or no. Within what is the maximum time period? Monday.
By Saturday, Monday.
Next Monday.
Next Monday, because following the day, first day, Tuesday is the following day, first day. Tuesday, Wednesday, Thursday, Friday, 4 days completed. Saturday, Sunday, holiday. Monday, next Monday, before closing hours, 5 o'clock, you have to negotiate. Otherwise, you will be responsible. Then the 14th, we see about the not later than 20. Here also, they can ask some questions. The 20-day, within 21 days of shipment, the documents has to be presented for negotiation. All the documents, customs has issued the SDF document that should be brought for negotiation within 21 days. Then the document may be prior to date of LC, because it is LC will be opened only at the last minute. But customers will be proceeding with a firm order, because opening LC is costly. So only towards the shipment only the LC will be opened. So that is why documents documents can be prior to the date of LC. Discrepant here also the articles discrepancy.
For complying it is 5 days. For presentation it is 21 days, sir.
Everything is 5 days.
Then 21 days is for what, sir? Then?
That is submission of documents. You have sent the documents, bill of lading, ER form, everything you have to bring to the document for negotiation within 21 days. This is for the banks to decide. This is for the customer compliance. Customer should bring to the branch document within 21 days. And the branch should decide the documentation within 5 days. Both are different.
Okay.
Got it?
Okay.
16 days is whenever you are sending the goods to the foreign bank, they should within 5 working days in America, if it is to America, they should decide immediately. What suppose your documents are having some discrepancies, they should say immediately what are all the things.
So 5 days is for each bank, no?
Each bank in each country, depending upon. If America means their banking countries, their banking days. In India means our banking, because the holidays will differ. Because of that only litigation happens. Here 16 article 16 that says any discrepancies they have to state immediately via SIFT. This is discrepant, we are not paying, or they are holding for referring to the party, or they can say we will do as what we have done earlier. Whatever they have decided with the payment, they have to inform within 5 days. Why wait? Within 5 days. That is very important. Suppose they return the document, refusal of payment comes after 5 days, we are not, but they have to make the payment. That bank is liable to make the payment. Like that, 28 questions can ask. Insurance. 3 conditions are there in insurance. Number 1, insurance should be in the same currency. If the credit is in dollar, you cannot take the insurance in yen. It should be also in the dollar. So, but if the LC is permitting, then you can permit. If the LC says the insurance can be in Japanese yen, then you can take it. Unless it is mentioned, we have to stick to the same thing. Then normally the insurance should be for CAF value, cost insurance freight value 110%. And if he says that it is more than one original, is usually policies will be issued in 3 originals, because we will be sending the document separately in 3 couriers. The purpose is, even if one is lost, with the other original, we will be able to take the delivery of it. So that is the purpose. So everything should be submitted. Then Article 30 speaks about plus or minus. If nothing is specified, if the amount varies by 10% or quantity varies by 5%, it is accepted. It is not a discrepancy. Then force majeure is, if the documents are not presented, or bank is not able to negotiate, or reason beyond the control of the banks. Flood, bank is not open. By the time the documents expired, bank is not responsible. Customer has to amend the LC. Article 30 is a transferable credit. Suppose I have transferred the credit to another one party, Mr. A. He cannot further transfer. Either he should do or he should give back to me. And same time, I can have also I can give 50% to A, 50% to B. I can have any number of second beneficiaries. So that is a point.
Sir, one doubt, sir.
Yes.
Sir, quantity plus are minus 10 and
quantity 5. Amount 10%. If I am open an LC for 1 lakh, even if you give me a document for 1 lakh 10,000 or 90,000, I should negotiate. I should not say your LC says only 1 lakh. You are giving me 1 lakh 10,000. I will not negotiate. Discrepancy. You should not tell. It is variance.
5%,
5%
okay,
is in quantity. That is the amount 10%, quantity 5%. Okay. Suppose you are saying 100 tons of iron ore should be done. Instead of 100 ton, it is only 95 ton or 105 ton. It should be accepted. Because these are all very, very interesting, because the paucity of time, I am not explaining. These are all, so many interesting cases are there. As Varyathan sir told, this is a very lengthy topic. We are crushing everything to a capsule. Otherwise, so many very, very interesting, because being bankers, you will be able to appreciate all these things. But for responsibility, we don't have the time. So many cases are there. Because based on that only, this has come. And this is
question is asked in ABM, sir. In ABM, this question is asked: LC transferred to A to B, B to C, C to D. This is happen or not?
It cannot be done.
Yes, sir. This question is asked in
ABM. Oh, right, very good. But it cannot be done. Yes, suppose I transfer to you, you have to, because it is just like that, contract of agency, that legal also. You see, the IBS has asked, Valyathan sir has asked me to take a class. So they are the principal, I am the agent. So suppose I am not able to take the class, I cannot ask my wife to take the class. That is the maxim you would have studied. Delegaris potus non delegari. Very interesting. He who is delegate cannot further delegate. See, if I cannot take the class, I have to tell back to Valyathan principal that I am not able to take the class. So that is the same. So there's a comprehensive. You see, by this time they expect that you would have comprehensively, you would have studied BFM, risk management, and also the legal thing, you are aware of it. So that is why this is a good thing that you have brought. And standby LC also, same thing I told you. Reimburse uniform URR also I have told you. One slide is there, I will explain. International standby practices. Okay. Then this is how reimbursement mechanism. I think we have got only up to 11 o'clock, isn't it? Isn't it? Let me see.
Yes, sir. Yes, sir.
Yes, sir.
Okay. Next, when it's a class?
1 o'clock.
No, 1 o'clock. No. Our class is 11:30. My God.
11:30. 11:30.
11.